As top-tier on-call programmers, we should be aware of the recent news in philosophy, history, finance, and politics. Here is one headline that captured many people's imagination. A stock named GameStop has risen so much in its price, in its market price, from $50 to $500. So without taking into account whether the value of the stock justifies the price of the stock, let's see where we stand today and how could such things happen. So first and foremost, people look today for the next Tesla. People look for the next Bitcoin. You can actually hear people say, what is the next Tesla? What is the next Bitcoin? Because they say, oh, I missed this opportunity. I heard about it. I heard about Tesla. I heard about Bitcoin, but I missed this opportunity. So next time such a thing happens, I won't miss such an opportunity. So this is a cause number one for such spikes. The cause number two is that in today's world, the internet serves as a ground base for rumors to move so fast. You have social networks that basically when someone says something, it spreads so fast. Especially today, we are almost in a peak of such networks. The third reason is that people begin to believe YouTubers and people that spread their views on the internet. So in the past, we had a few authorities. If you wanted to learn something, you went to university to learn from the people. Today, you can go to YouTube and learn from a 16-year-old YouTuber about some stuff. The fourth reason is that people are looking at hedge funds and try to imitate them. So hedge funds are much faster than standard ETF. They can buy, they usually do the buys and sells much faster. And people look on them and their actual website to imitate them. And since they are fast, then also the people are fast. And the network effect with all the social networks creates this whole giant effect. The next reason is that many people are working from home. And because they're working from home, they are much more exposed to the internet. They do some more thinkings about their life, where they want to get to. It's like people did a change in the phase. They might be working more, but they also think, okay, I'm now working from home. On the past 20 years, I didn't. What's next? And because of that, they say, you know what, 5 years ago, I didn't notice this stock that was rising. Maybe I should pay attention now. The next reason that causes such spikes is the passive investments. So today, many people say, okay, I don't have enough information. I'm just going to invest passively in the total stock market. But these passive investments came from a place that said that active investment would not achieve better outcomes than passive investments. And what does this mean? This means that the experts from the active investments cannot predict what would happen and would not get better results for you. This means, again, that the authorities, the people that are supposed to understand things are not understanding them. And what happens when the people that are supposed to be the authorities are not anymore the authorities? You again listen to the 16-year-old YouTuber because they are no authorities. So this is the basis and the ground that we live in today. Now let's get back to GameStop and see what did happen there. So as we said, the end result is that the price of the stock went from $50 to $500. So basically what GameStop is that it's selling games and accessories over malls, and these are physical stores. And because we now have online stores that sells games, etc., then this meant they have started declining, and they have started declining since 2015. So there is a gradual decline from 2015, which moves on and on and on and on. This drew into the game people who do shorts on this stock. They make profit out of stocks which are moving downwards. This is perfectly fine. Then came 2019 and 2020 with the COVID-19, and there was a sudden drop in all the stocks, including this one, which brought it to the lowest low. Okay? Then hedge funds saw this, and since we said that they are faster than ETF, they started buying this opportunity, because this is a risky opportunity, and this is what some of the hedge funds are doing. People who imitate these hedge funds are also now starting to buy. And then people write blog posts, they share to social networks, and there is a network effect of a stock, which gradually over 5 years went downward and downward and downward and downward and reached a really low bottom, and they are dealing with games. It's like semi-internet. They are selling games and they are selling accessories. It's computers. It doesn't make sense that during the COVID-19, a computer company would go down. This sounds like an opportunity. So people posted messages to all the social networks. The hedge fund started buying. It started rising, and all the shorters, the people who made shorts on the stock, they started seeing that they are going to lose much of what they have shorted. So they started getting rid of the shorts. And because they get rid of the shorts, the stocks even gets higher even more. So there is a big surge in the stock, and everyone are saying, okay, this is the next Bitcoin, this is the next Tesla, I'm going to invest now. I'm not going to miss the opportunity that I had back then. And there you have it. You have a stock that rises from $50 to $500. We did not take into account the actual value of the stock, only the price of the stock. This is a different session. So there you have it. In this session, to sum up, we scanned the background and the groundwork of what could make today something to really spike in all the atmosphere that we live in today, in the finance and economics and the stock markets, and how it actually happened with a very certain specific stock, and what is the outcome. And I think we should all top-tier on-call programmers learn from it, and let me know what you think, whether you want more such episodes about linguistics, finance, economy, philosophy, law, and history and physics. So thank you for listening, and I will see you next time.